right, everybody, welcome back to the show. Glad you clicked on the video tonight. It's very well appreciated. I have a very informative video for you tonight. I tell you guys, the market has been throwing opportunities at us left and right, and we want to capitalize off of those, all right? This video is the setup before the squeeze. The setup before the squeeze heading into the quad witching on the 20th, all right? Got an interesting video for you tonight. I go by the name Coach UV. Glad to have you, and I am represented by the Unique Trading Group, where strategy meets mindset and discipline turns into income. Tonight, we're going to be focused on the SPY, Tesla, VIX, gold, put call ratio in the bond market. The put call ratio, bond market, these are like market eternals, really more so the put call ratio, where I get a deep dive, pull the onion back a little bit to see what's really going on in the human psychology and price, all right? But enough of the intro. I want to go ahead and get to the meat of the discussion tonight. We're going to be talking about gamma, all right? What is gamma, okay? Understanding the setup before the move. Technical patterns, emotional swings, and gamma, okay? I'm sure you guys know what technical patterns are, all right? We're going to notice those as we go on a chart, all right? But we got to learn how to identify these patterns, all right? Trend analysis, the volume, all right? Support and resistance, right? I like demand and supply. But these are the things that we must notice. Emotional swings, all right? Emotional swings are human behavior in the market. Those patterns you see on the chart are human behavior. If you can learn to spot these things, all right, then you're building up a thesis around a edge, okay? This is your playbook, all right? And that creates the psychology. Psychology means nothing without context. You need to understand the day type. Are we in a trending day moment, a narrow ranging day moment, or a test and retest day moment? Those are your 3 day types. It's only 3 of them, all right? So gamma before the fuel behind the move. Definition of gamma. Understand gamma as the rate of change of delta in options trading, influencing the sensitivity of an options price. Gamma squeeze. Learn about gamma squeezes and how they can lead to rapid price movements. All right, so if I wanted to take a trip out of town, out of state, right, and I had to go get a flight and book a flight, that flight can't take me and the other passengers to where we need to go without fuel. The plane cannot leave without fuel, okay? The stock market, the stock that you're trading, that's your airplane, all right? In order for that stock price to move, you need fuel. Gamma's that fuel, okay? We can actually identify where is the heavy squeeze and the heavy fuel going towards what strikes, okay? Because understand that this is an impact on volatility. It's an impact, all right? Hedging strategies. Market makers and hedge funds, they see these opportunities as hedging, all right? And it's a mechanism, it's a knee-jerk reaction in the market where prices go up and the market makers have to buy back positions, okay? They're counterparts to the traders who buy and sell in the market. The market is only, again, the market is only a display of buyers and sellers in the market. The market is only an imbalance of buyers and sellers in the market. So what's the conclusion? Understanding these elements, technical patterns, emotional swings, and gamma, you can better prepare for the market moves and make informed trading decisions. These insights will not only enhance your trading strategy, but also improve your ability to navigate the complexities of the financial market. All right, now, I know what you guys came in for. Let's hop into the charts. I don't want to keep you long. I don't want to make this short and sweet. You understand? So we're going to start with Tesla. We're going to go to the 4-hour time frame. I have a nice setup for you. First, I wanted you to notice this right here. Okay, we have a double bottom. All right, a double bottom. Okay, and we have a higher low that's been created right here. A higher low is being created on the Tesla chart. This is the 4-hour time frame. Now, if you don't know what this is, I'm going to show you what it is. All right, right here where you see this green box, right here, follow my cursor. I'm going to make the screen bigger so you guys can see. That was a gap on Tesla. That gap got filled. Now, if this is your first time hearing this, cool. But you have 2 scenarios. You have a gap fill and reversal, and you have a gap fill and go. All right, the gap fill and go, this is what the pattern looks like. All right, pay attention to my cursor. All right, let's say that this was the gap here in between. Let's say price is falling just like it is on Tesla on the 4-hour. Price falls back down. This is a gap fill and reversal. Comes down, hits the gap. It fills it, all right, creates a higher low, and then it continues to the upside. Gap fill reversal, okay? That's your gap fill reversal. Let's say you have those same 2 lines and you wanted to check out a gap fill and go. Price comes down, it closes the gap, retests, right? But it rejects and comes down and it goes and continues to the downside. That's a gap fill and go, all right? Right now, what do we have? Currently on the Tesla chart, we have a gap fill and reversal so far. We are inside of a range, okay? As long as we hold that range, we can bounce back to the upside. You can see that on a minute chart, 5-minute chart, hour chart, 4-hour chart, 15, 30 minute, it doesn't matter. Put a horizontal line on the bottom of the range of the chart you're looking at, like the 4-hour, right? And you can see that same line. I'm going to do it here. The bottom of this box is the bottom of this range candle, and we're going to make it a red color, red, right? Let's say I wanted to use a 4-hour like now as my overall bias of direction, right? We understand the thesis of the gap fills we have in the pattern setup, right? Higher lows, simple technical patterns. Higher lows meaning bullish continuation maybe towards the upside. We have a reversal. The bears are being exhausted. But since I'm getting my direction on the 4-hour, this is my bias, my macro, my overall thoughts on the market. I want to let the 15 on the 5-minute be my entry. So since I have this red line, I know if it breaks below the red line, it's puts. If it holds there, it's a place of demand. How can I see that? That same red line needs to be seen on the 5-minute. Okay? Can you see that red line? Let's squeeze in the charts quickly so you guys can accurately see. All right, we are up to date. We are up to par. You see what we're looking at right now. You can see this on the entry time frame, intraday time frame. All right, that's that gap that is respecting. Okay, now price is trying to retreat back to the high side. 305 is your problem area, right? As some people like to say, right, your problem area, but it's a place of resistance. Okay, so it's make or break at 305. We can burst above or we can go below. Right? It's like, okay, duh, right? Duh. Who don't know that, right? Only 2 ways to go. Here's the problem though. Most traders are going to chase here. Folks who are already swinging calls are at the leisure to taking profits no matter where the market is at open. All right? Because they want to take their money and secure profits. And you have rookies who chase that move and the market takes them down. This is fear. All right? They let go of their plays and the other guys will let go of their calls and they're shorting the market. So you have 2 or 3 things happening at the same time. That's market behavior. That's human behavior. Profit taking and fear. Okay, once that fear subsides and we found balance, that's when you start to see price being respected. All right, this is called imbalance and balance, and you want to find that imbalance. All right, those are where your opportunities are for the balanced market before it happens. Okay, so now we can see upside towards 305. My call triggers for Tesla on the 4-hour time frame is 305.50. All right, of course we can wake up in the morning time tomorrow. Prices could already be there. Do not chase. I repeat, do not chase. Always wait for a pullback. Now what I'm getting ready to show you, it applies to all charts, any chart. All right, it applies to all charts. Okay, it applies to all charts. All right, let's take off this here. All right, now I want you guys to notice. Okay, here's my trigger here, right? 305.50, 4-hour trigger. All right, it's your 4-hour trigger. Bear with me as I navigate this screen. All right, so here is a point of control on the 4-hour. All right, this purple line here's a point of control. All right, we bounce off of that control line. Okay, I'm gonna take this away as well. All right, we have pendulum swings. What are pendulum swings? It's a range of emotion, human behavior. All right, that's exactly what this is. You have your gaps here, your gaps above. All right, but you have here, if you see this yellow thing I have here, right? This yellow thing look like a Pac-Man or a megaphone for a sports game. What you have is price that swings back and forth. You want to catch these moments, all right? These are the moments you want to catch. Price goes back and forth inside of this range in a pendulum swing, all right? And so in order for us to get back above of this halfway mark of this entire move, we need to get above the 21. And that is sitting at 320. Now what's ironic about that 320 is that we have to get there before we get to 320. These prices have to manifest. So I like the 4-hour, I like the daily and the weekly to give me my levels. If I get a higher price open than 295.14 and this shows a strong place of demand, I want to target 300. Understanding that 300 is a resistance level where profits could be taken. I want to secure my profits at 300. Now 305 is the next level when it's saying whether that's Monday, Tuesday, Wednesday, Thursday, or Friday. It don't matter what day or what time of the week is. If I'm in front of my computer or have an alert set, I know what price that I'm looking for. And so I react off of that. I do not predict or randomly just throw my market into money because I want to make money. This is a business, and trading is about the process and not the money. Once you get the process together, the money is only a byproduct of a well-oiled machine. You understand that? So 305.50 on the 4-hour is my call trigger for a day trade on the Tesla chart. And if I want to go to the weekly chart, then I want to use the weekly opening and close price, right? I want to use those as my edges, my triggers. If we open higher than the weekly and close above it, then I want to swing calls to the upside. Same as the bottom. If it goes and opens below the previous close, which is 295.14, I want to be thinking puts, and I want to be targeting 290, using 295 as a place where price can retrace back up towards, but maybe could reject as your 50% mark. All right, and that 100% mark is 290 and 300. This is the range that we're in, a $10 range. All right. Okay, this is the move that you guys are missing here. The market goes back and forth inside of these swings. All right, back and forth inside of these swings, and I want to catch. I want to catch them. Okay, I want to catch those moves. These are the moves that I want to catch. Right here at the top and at the bottom. Right at the bottom and right at the top, because I understand that's my edge. The other traders and rookies are caught in between here making decisions. They're at the whim of us making our decision. All right, just like right here. Just like right here, guys. The breaking of a box, a W, breaking of an ORB, right? It took about a week for that move to happen. All right? And I'm having some technical difficulties here, guys. Bear with me as I navigate the screen. All right. So that's what I have on Tesla, okay, guys? Now we're going to move along. All right, we're going to move over to the SPY. All right, SPY still has a V bottom, reversal, double bottom. We've already broken the neckline. We are making a bullish momentum to the upside. We have higher lows. We've broken these previous highs, but we haven't got these all-time highs here. I see us hitting 600 and beyond. All right, we have economic headwinds next week. Be careful. I see the 17th of next week. Not the week coming up, but the following week that's coming up. I see some bullish momentum on a Tuesday or a Wednesday, okay? We're going to have some economic data in the quadruple witching era, which is going to be volatile, all right? It's going to be a lot of rookies chasing the market, all right? Chasing the market. So I am bullish on SPY above 600. 585 being my line in the sand. I want to load the boat if I can get a drop back to 585, 590. 595. These are my pivot points, okay? As long as we don't break structure, then I'm good, all right? But if we break below 585, then I am invalidating my bullish call, and I want to start changing my bias towards the downside. Other than that, my targets on SPY are as follows: 6.5, 6.10, all right, 6.11, okay? Strong demand is at 683, all right? If we open above 599.14 and stay above it convincingly, I am looking bullish. That is my edge. Price opening above a previous candle, okay? That's what I want to look for. Take a picture of this and screenshot that. Above 600, I want to take calls. 683 is precisely, I want to take calls above to 603, 605, and 611. But I want to secure profits. Even though I'm giving these targets, that don't mean hold. Always monitor your trades, all right? And that brings me to an interesting subject, all right? The trader's creed. I am a consistent winner because I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk while I'm willing to let go of the trade. I act on my edges without hesitation or reservation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of a consistent success, and therefore I never violate them. All right, get familiar with the Trader's Creed. This is a part of my Discord. If you're not part of the group, please check out the link below. If you've been enjoying this video so far, do me a favor, hit that like button. It helps out the YouTube algorithm to get my videos pushed to people who are interested in some of the same videos you are. All right, make sure you hit that subscribe button so that you're informed on the most valuable videos that I drop. We would love to have you. Listen, the markets are way too good for you to be missing the best setups. Way too good. And if you are, don't worry, okay? If you can't find consistent success, if you're chasing revenge trades, all right, or FOMO, fear of missing out, all right, all of these things can be helped and compartmentalized into statistical edges, okay? And I want to teach you that. So check out the links below. Join the others who have found success in learning to fish, all right? Because call outs are only as good as the person taking them, all right? All right, so we're on the PCE. This is the put call ratio. If we are above 7.1, all right, listen, above 0.70, all right, if you're new to this, you're new. The put call ratio is a market eternal, all right? I deal with options. I buy shares, but I also buy options. What does that mean? I get to buy 100 shares for one price. I lock in a cheap price for 100 shares. That's what I get to do buying options. And so that is puts and calls. Puts means, yes, I can make money to the downside in the stock market. If you've never heard that before, you can make money when the market drops. Yes, you can, okay? But when it drops, people refer to it as puts. Puts meaning goes down. If I want to trade towards the upside, all right, it's called calls. I want to take a call to the upside, so puts and calls. This is the put call ratio. What does it tell me? It lets me know how many people are buying puts and calls. I won't do a deep dive in this video, but if you would like me to, comment on it, because this is one of the edges that I use to give out call outs inside of my Discord. You understand? So if we are above 0.70, all right, that tends to be a little bearish. Below it is bullish, all right? All these moments when you see the PCE drop on the hour, every time it dropped, the SPY went up. And you can check this yourself. Go back, test the dates on my screen you see. All right, go back, test the dates. June 4th, June 3rd, May 30th. Just go check these dates, okay? Now, let me give you a quick tip. Just because we're above that 0.70 that I gave you, that don't mean that the market is bearish on SPY. Sometimes it can mean that there are people hedging their position, and sometimes that can even squeeze up the market, okay? All right, but always wait for a pullback in the market. Always wait for a pullback in the market if you're not already in the move, okay? Define your entries, your exits, and your risks. The bond market, all right? Back to the bond market. Now, when Trump was getting into office, and maybe the beginning of the year too as well, in the end of last year, all right, you could tell the bond market and SPY, all right, they move the opposite, okay? The bond market, this is the 20-year plus year bond market, all right? This is like a safe haven stock, a safe haven for recession fears and interest rate talks from the Feds and or the government and the president, all right? They tend to run here, right? So when the bond market goes down, SPY goes up, okay? Now, it wasn't correlating that way before. They both were moving in tandem. And Trump had some issues from somebody higher up that told him, hey, you're doing too much, get this right. So now you get more of a, in conjunction with the way things should be ran, really, when you look at the TLT in correlation with SPY. And that is going down for now, all right? So we can see some sort of bullish continuation, but we do have some demand here. And so I want to be very careful next week. I want to be very selective in what I'm trading, and I want to secure my profits because the market is very volatile, right? This is the setup before the squeeze, and you have to understand that. We're going into economic headwinds and into quadruple witching, all right? So there are self-fulfilling prophets that happen. It's going to be really, really volatile going into these weeks and earnings and economic data, all right? Now, my last but not least chart that I'm going to show you is Merck, all right? I keep this short and sweet. Falling wedge, all right? Falling wedge, all right? This is what I see, all right? I just need a catalyst. I'm already in position, all right? My biggest position, my biggest holdings is Merck, MRK. I just like the falling wedge. Do your research on falling wedge. As a matter of fact, I can actually show you guys that in a second here. Let's go to falling wedge. I want to show you guys the falling wedge so you guys can have a good look at it. Those who are watching that don't know what a federal falling wedge is, all right? And this is what I see on Merck, all right? Loading the boat up and waiting on pullbacks, and I do have a leap, okay? This is the pattern that I see on Merck, okay? And I want to catch that breakout, okay? I want to catch this breakout, all right? I'm already in right here. We're already in, okay? MRK, perfect setup. MRK, perfect setup. This is what I see. And I'm waiting very patiently. If anything happens with any sort of medicines, vaccines, anything pharmaceutical related, right? Merck stands to benefit from that, all right? And so I don't care how long it takes. I don't want to be biased, but I also want to watch my levels, okay? And so if we get below anything below 70 bucks, 72 and 70 bucks, if we get below these prices, I do not want to be in calls, okay? I want to protect my money. But I do see the upside potential, and the risk to reward on this chart is sweet, okay? Very, very sweet. With a high projection target of $100, a smaller projection of 85, okay? And another range target of 95, okay? So these are my targets, okay? Right, MRK, falling wedge. I'm already in position, short and sweet. Listen, I appreciate you guys watching this video thus far. If you have liked it, again, hit that like button. Before we leave, I'm going to show you guys some of the gamma on Tesla. All right, if you see my screen, we have some problems here at 300, all right? Like I said on the chart, 300, man, it needs to get past 300. If we do, 310 will be the next magnet target. All right, it's going to shoot to 310, and you need to watch out because we can quickly get to 320. All right, don't fight the trend, man. If we are above 300 and we are convincingly breaking over 305, the target I gave out, all right, these will be areas to watch. If you're not in the trade and you wake up to 305, don't chase, wait for a pullback. If 305 acts as demand on a pullback, right, breakout pullback, then you want to try to scalp a day trade. But always set your stop loss below the low. All right, you want to protect your money. That's how you stay in the game when it comes to trading. Protecting your money is about low risk and high reward. Low risk and high reward, and that's what it's about. That's how you stay in the game. All right, got to be a great loser and know how to lose. All right. All right, now SPY, we're pulling up SPY. We want to see the gamma as well on this. All right, this is the setup before the squeeze, your weekend video. Hope you guys enjoying the video thus far. I am super prepared. And whoa, look at what we have here on SPY, the 600 strike, about 140K versus 16K. Put interest, all right? Put interest, all right? Remember the put and call ratio. We're watching that in real time, all right? 1.295 billion net gamma exposure, right? The 600 strike. We are not at 600 on SPY right now, but we could get there. Think of this as a magnet for price. If we stay above 595, 599, which is the closing price from last week, then we are bullish, all right? So anything above that, understand that 600 is a magnet. And if we can hold this as a place of demand for consecutive weeks, we can see higher highs after quadruple wishing or up into it. But again, always define your entry where you want to get in at, right? On a pullback for a higher low if it's to the upside. If it's to the downside, you want to get that lower high that rejects. You understand what I'm saying to you? All right, that's what we got for you guys today. All right, this is the setup before the squeeze. Hope you guys are ready, man. I hope you guys are ready. If you know anybody you know that wants to learn trading or wants to find a great community, tell them to come this way. Send them this way. I also have a nice, unique affiliate program for my tier 2 subscribers. Okay, they're doing good in the chat and the Discord. My community is growing, and I appreciate you guys' engagement. Appreciate you guys listening, sticking with me. If you have anything you want to throw as far as suggestions for the chat or for the channel, anything you want to learn, guys, I am here for you. All right, leave those comments below. Like and subscribe. I am your boy Coach UV, and this has been Unique Trading Group recap for the market last week and upcoming. Until the next time, guys. Peace.